audit. Tax audit is an examination of taxpayer business income and financial affairs to determine the right amount of income need to be declared and also the right amount of tax need to be calculated and to be paid based on the tax regulations and law. In Malaysia, we have two types of tax audit, which is tax audit and also field audit. First of all, tax audit. What is tax audit? Tax audit is a tax audit that is being held in the IRBM office itself, and it mainly focuses by checking income, expenses, on all the claims, relief claims by the individuals, service provider, IHC, and also trading companies. In carrying out this tax audit, the IR director has to request the taxpayers to give explanations and also the document that is relevant within the 14 days of the request. And if the taxpayer failed to do so, then you have to proceed to do the field audit. Secondly, field audit. What is field audit? Field audit is a tax audit that is carried out in the taxpayer premise, although it may also be carried out in the IRB office or any other suitable places that both parties agree on. Field audits involve in checking overall business records ranging between 1 to 3 years of assessment. In the case of sole proprietorship and partnership, personal records may be needed if the business records are incomplete or mixed expenditure between private expenses and also business expenses. Tax Audit Framework 2019 takes effect from 15th of December 2019. The IRB will notify the taxpayer on the field audit at least 14 days prior to the visit. The letter of the notifications of compliances visits contains the following details: dates of visits, record to be prepared, year assessment to be audited, names and of the audit officer, and also the audit visit time frame. As a taxpayer, they can also contact the relevant IRB branch to verify the field audit visit. Taxpayer may apply to defer the field audit upon receiving the notification if there are any unavoidable circumstances or reasonable grounds to justify for the deferment. The scope of tax audit can be extended to business or company which is related to the taxpayer or which the taxpayer has control on it. Notifications will be given by IRB of such extension of audit on other companies.
Hi, my name is Muhammad Fidas bin Nur Azaman. So I will share with you guys about audit compliance. Audit compliance is the process of analyzing and verifying that an organization implies to specified standard, legislation, policy, and procedure. The purpose of compliance audit is to verify that an organization is operating within the legal and regulatory framework relevant to its industry and follow its internal policy and procedure. First, regulatory compliance. Organization must comply with various law and regulation and depending on their industry and location. This could include financial regulation, data protection law, and industry-specific standards. Compliance audit assess whether the organization is meeting the requirements set forth by relevant regulatory bodies. Next is internal policy and procedure. Organizations often establish their own internal policy and procedure to ensure efficient and ethical operation. Compliance audit should examine whether employees and process implies to this internal guideline. Third is documentation and record keeping. Maintaining accurate and up-to-date documentation is crucial for compliance. Audit may focus on the organization record-keeping practice to verify that necessary documents are in place. Data security and privacy. With the increasing emphasis on data protection and privacy, compliance audit often include a review of how the organization handles sensitive information and whether it meets the standard set by data protection laws. Last but not least, penalty for non-compliance. Non-compliance can lead to legal consequences, financial penalties, damage to reputation, and other adverse effects. Compliance audit help organizations identify and address areas of non-compliance before they result in serious consequences.
A desk audit is conducted at IRBM's office, while a field audit is conducted at taxpayers' business premises, with taxpayers suggesting alternative locations if not suitable. IRBM will notify a selected taxpayer via a letter of notification of audit. The audit notification period is 14 days, with the taxpayer's agreement allowing for a shorter period. A confirmation letter is usually followed by a phone call for confirming the audit visit. A taxpayer may request for the audit visit to be deferred due to unavoidable circumstances and reasonable grounds. Taxpayer can confirm an audit visit by contacting branch audit manager or branch director of IRBM. This is the point you are getting audited. The taxpayer may contact the branch audit manager or branch director of IRBM for the purpose of confirming the audit visit. The audit visit is exclusively for field audits, typically commencing with an interview. An interview allows audit officers to meet a taxpayer for understand their business activities and discuss the audit. The taxpayer will explain their accounting and record-keeping system, and the person responsible for handling their business records will also be interviewed. The audit officer should be allowed to examine all business records and physically inspect stock and equipment for verification of claims. Time-bare records will not be examined. In certain cases, records may be needed for sole trader and partnerships audits, excluding business records. For business record, all relating to the business must be in the record. For other than business record must have. Books of accounts are used to record receipts, payments, income, and expenditure, while invoices, vouchers, receipts, and other documents are required for verification. Electronic records and other records specified by the DGIR are also maintained. The audit officer will not search for or take possession of any records, only examine them at the taxpayer's business premises. If necessary, they can make copies of relevant documents. However, if the taxpayer's workplace is unsuitable or a copying facility is unavailable, the audit officers may obtain records for examination at the IRBM's office with the taxpayer's consent. The on-site record examination takes 1 to 3 days but can be extended based on factors like business size, transaction complexity, record format, and taxpayer cooperation. This timeframe is applicable only to field audits and is subject to change. The audit officer will prepare an audit findings report for branch audit manager approval. Under certain circumstances, taxpayers must be present at IRBM's office for discussion on proposed tax adjustment. They can also seek clarification or provide further information to expedite audit settlement. Tax adjustments will be communicated to taxpayers, who will have the opportunity to express their views and provide explanation on the audit findings and proposed adjustments. The taxpayer has 18 days to file an official objection to proposed tax adjustment, providing additional information and evidence to support their objection. If no objection is made within 18 days of notifying proposed tax adjustments, the taxpayer agrees to the adjustment. If objections are found to be unfounded, the taxpayer is informed. If no adjustment is made, a notice of additional assessment with penalties or non-chargeability to tax is issued. If no adjustment is made, a letter informs the audit is finalized. The tax audit settlement timeframe is 4 months, with IRBM informing taxpayers if the case takes longer. Once settled, audits should not be repeated on the same issues for the same year, but can be repeated if new issues arise.
Assalamualaikum warahmatullahi Doctor. I'm Nur Ali Atirah binti Khairi and I'll be presenting on the criteria of tax audit. It is expected that a taxpayer will have been subjected to tax audit once in every 5 years to ensure the taxpayer submitted his tax returns in full compliance to the Act, public rulings and court precedents. There are about 6 criteria for the selection of tax audits, which are: the first one is location, specific industries, contentious tax development, third-party information, risk analysis, and lastly would be taxpayers' previous record of return. Let us look at the first criteria as mentioned just now, which is location. It is said that the companies located in major cities such as Kuala Lumpur, Penang, Johor Bahru and Malacca would be selected for tax audit relatively higher than other cities. Why? This is due to the large number of listed firms and economic activities that are well established there. The second criteria is specific industries. Specialized industries such as property developers, contractors, medical practitioners, taxi operators, palm oil plantations, telecommunications, and information technologies are among the industries that are chosen for tax audit due to the fact that they are dynamic, vulnerable, and they have many unresolved and contentious tax issues. Next, we have the criteria, which is the contentious tax development. The hotly debated contentious tax issues such as transfer pricing, withholding tax, interest restriction, reinvestment allowances, and Section 4A, rental income, which is renting for business purposes, may be prioritized for tax audit as judgmental interpretation are involved between taxpayers, IRB, and the courts. The fourth one we have here is the third-party information. IRB will embark on tax audit on another taxpayer if there is a reasonable suspicion that such a taxpayer may have underreporting business income or rental income upon examination under revenue expenses as claimed by the other corresponding taxpayer. Furthermore, risk analysis is also considered as one of the criteria for tax audit. With the help of modern and information technologies, IRB is able to compile statistics on industries' average on turnover and gross profit of all industries. Risk analysis and evaluation would then be performed on companies that have significant deviations from this average. Industries with changing profit margins such as hypermarkets, spare part wholesalers, and swallower operators are more likely to be audited. Last but not least, let's have a look at the last criteria, which is the taxpayer's previous record of return. Taxpayer who has the habit of late submission of return and non-submission of return would have a higher risk of being selected for tax audit.
Assalamualaikum. Hi, my name is Nur and I am 24 years.
I am from class KAC 2203A. Now I would like to present about the assessments and penalties. Firstly is provision of reasonable facilities and assistance. The taxpayer is obliged to provide reasonable facilities and assistance to the IRB officer when they are carrying out the field audit in the premises of taxpayers. Under Section 8P, Subsection 1 and under Section 8P, Subsection 1E, empower the DG to have full and free access to all lands, buildings and places at all times. The owner or the occupier must provide such access immediately upon such request. Second, have full and free access to all books, documents, objects, articles, materials, and things at all times. Third, search the lands, buildings, and places. Information relating to the places to all books of accountants and other documents shall be given upon request. Lastly is inspect, copy, or make extract from any such books, documents, objects, articles, materials, and things without making any payment by way of fee or reward. So, what is the penalty provision of reasonable facilities and assistance? For the failure of the taxpayer to provide reasonable facilities and assistance to the IRB personnel in the field audit is an offence to the Act. Upon conviction, the offender may be liable to fine Rm1,000 to Rm10,000 or imprisonment up to 1 year or both. Next is keeping of record. Every taxpayer carrying on premises shall keep anything in safe custody submission record for as long as 7 years from the end of the year to which the business income or adjusted loss relates to Section 82 subsection 1A. Record is defined in Section 82 subsection 9 to include books of account recording receipts and payments or income and expenditure. Second, invoice, vouchers, receipts, and such other documents as in the opinion of the DG are necessary to verify the entries in any books of account. Lastly, any other records as may be specified by statutory order as provided in Section 82, subsection 3. Next, timing of record accounting entry in books under Section 82, subsection 6. Taxpayers who are required to keep records shall cause appropriate entries to be made in those records in respect of the transaction within 60 days of each transaction. So, what is penalties under keeping of records? The failure to comply with the requirement of contravened Section 82 shall be guilty of an offence. Upon conviction, the offender shall be liable to fine Rm3,000 to Rm10,000 or imprisonment up to 1 year or both. Penalties on incorrect return. Upon completion of tax audit, the IRB may impose a penalty of 100% on tax uncharged if the tax return submitted by taxpayer was found to be incorrect or if there was evidence showing taxpayer understating his income. It must be evidenced by facts. The Tax Audit Framework 2019, which takes effect from 15 December 2019, provides that penalty imposed under Section 113, subsection 2, following the tax audit would be at 45% on the tax uncharged. Penalties on repeated offence. If a taxpayer commits a repeated offence after being audited or investigated, the penalty under Section 130, subsection 2, will be imposed at a concession rate of 55% on the tax uncharged. Understatement tax. What is Section 114 subsection 1A? Under Section 114 subsection 1A provides that any person who assists in or advise with respect to the preparation of any return where the return results in an understatement of the liability tax of another person shall, unless he satisfies the court that the assistance or advice was given with reasonable care, be guilty of an offence and shall on conviction be liable to a fine of not less than Rm2,000 and not more than 20,000 or to imprisonment for a term not exceeding 3 years or 2 years. For the penalties under Section 113, without prosecution, there will be a tax uncharged. Penalty will be one time of the tax uncharged. For the with prosecution, upon conviction, the tax also will be uncharged, and for the penalty, it will be two times of the tax uncharged, and for the fine, it will be Rm 1,000 to Rm 10,000.